Hey everybody, Boris from BK Forex. Welcome to the commodity dollar update for Aussie dollar, dollar CAD, and Kiwi dollar for June 12th to June 16th of 2017. And of course, as always, the commodity dollar story is a lower volatility story, but this week was kind of interesting because it was a true run to the carry that we saw in the commodity dollars. The US yields continued to compress to the downside, and that made Aussie and Kiwi very much attractive to the carry traders because as long as those 1.5% yields in the Aussie, 1.75% yields in the Kiwi stay, there is no threat to the downside. Any decline in U.S. yields continues to make the Aussie and the Kiwi more attractive, and we saw exactly that as flows to the Aussie and the Kiwi continued. Next week, of course, the FOMC rate decision will be absolutely seminal in terms of determining whether that type of flow continues. If the Fed hints that yes, there's a strong possibility September is off the table, and that they're sort of really re-examining the whole tightening cycle given the slowdown in the U.S. economy, that will be massively positive for the Aussie and the Kiwi. I don't think the Fed is going to be that definitive in their dovishness, but if they're just even hesitant in their approach towards the September rate hike, it could potentially provide a little bit more upside to the Aussie. On the other hand, if the Fed is just unambiguously hawkish, and that's a surprise scenario, but not out of realm of possibility, they're really, in my opinion, the Fed is much more interested in managing market expectations than actually doing the rate hikes themselves. In other words, they could speak hawkishly and then act dovishly later on. You could have a serious correction in the Aussie and the Kiwi if the Fed is uniformly hawkish, because of course that's going to express itself in higher U.S. yields, and that whole carry trade that we saw this week very much could unwind as we go forward. Taking a look at the calendar, there's not that much data on the commodity front, but it's worth watching. So a couple of things. Of course, Wednesday, Super Wednesday, seems to be almost everything happening on Wednesday. The FOMC rate decision, the retail sales out of the U.S., all that impacting comms. And then after that, of course, we have the GDP data out of New Zealand, with Kathy bullish on that, and I think that's actually true because we're seeing better dairy prices, and generally, I think, let me see what she said here, better trade and retail numbers on Kiwi. So there's a strong potential here actually that the Kiwi could be an upside trade. Probably one of the better trades this week as far as just taking economic risk in front of an event. And then the secondary story would be the Aussie, and there perhaps could be an interesting trade on the cross side with a short Aussie Kiwi if we get positive Kiwi GDP and a disappointing Australian employment. Although it really would have to be horribly disappointing for any kind of a threat to the 1.5% rate. So I wouldn't be too aggressive about getting short the Aussie, but still on a relative basis, Aussie Kiwi could be the trade this week as we go forward. And then as far as everything else, there's really not much else on the commodity front. Nothing on the CAD side. I'm looking at see if there was CAD data in the front of the week, but I don't think so. No, there's nothing on the Canadian side. So let's just take a look at the charts and take a look at them in more detail. So here's the Aussie. Aussie stalling very much ahead of the 75.50. Not a surprise. This whole 75.76 remains very, very stiff resistance. On the other hand, there's clearly nice positive bullish formation here as we've made a higher low in the Aussie over here. And if the statement out of the Fed is sort of neutral to moderate, in other words, it's not overly hawkish, but not overly dovish, it still would suggest to me a more dovish slant. So any kind of a dip in the Aussie probably presents a pretty decent opportunity for a buy up, unless we have massively, again, the story with the Aussie here is the threat to the 1.5% yield cannot be real. If we have very, very negative economic data, then that threat becomes much more real, and the Aussie becomes much less attractive, because the only thing that's really moving this currency up is the carry trade differential trade, and if that comes under threat, then it becomes a very, very big problem. Kiwi is much more protected because the fundamental foundation on the Kiwi is much stronger. And in fact, if we have strong GDP, we're really threatening this whole 72.50. That's a very big resist area. This whole 72, 25, 30. That we had all the way out from February. If we can take that out, that really puts us right back on path towards 74, which is within striking reach here. So Kiwi, of all the calm dollars, looks the most promising as we go forward. Now, CAD, of course, is its own story. And CAD had some interesting developments this week. We had the oil just collapse to the downside, which created an upside move in the CAD. But then oil stabilized at 45. And to me, the story this week for CAD is going to be if oil can stabilize and actually rally off the 45s. If the 45 becomes a decent support and we can move all the way to the upside, then CAD has a potential here to really test this 134 support, dollar CAD to the downside. If oil starts to slip below 145, we're moving right back, and then the 136 really becomes a very viable target because the data out of Canada, even though it's positive on the economic side, doesn't have anything on the books this week, and a very a serious breakdown in the oil prices is going to have long-term ramifications in the Canadian economy. So while the Canadian economy seems to be weathering the lower oil prices relatively well, we had a nice big jump in employment data this week. That may not be enough going forward. Still, so if you look at this technically, let me just get rid of this just 1 second. Overall, it's still negative CAD, positive dollar CAD in this sense, because you're looking at a series of still higher lows over here, and it's still very much higher lows over here. We kind of held support here at 34. With a potential, to me, it's really the big story this week is going to be if we take out 35.50, then this is truly a nice base with a potential of move all the way out higher. The weakness in the CAD, highlighted by the fact that oil is still under threat at this 45 level, opens it up, of course, to further Kiwi CAD sales, Kiwi CAD buys, CAD sales as we go forward. The flip side, though, is if oil does begin to rally, there is a serious chance here for the Canadian dollar to outperform all of its commodity cousins because the data has been positive, and if oil begins to shape up and move towards the 50, as I said, this 134 level, very key support. A breakdown here could open up a move all the way back down to 132. For now, actually, looking at this technically, even though we don't have a very definitive, I just wanted to zoom in on this a little bit. We don't have a very definitive move. It would be much more bullish Canadian dollar, bearish dollar CAD if we ended up on the lows of the day. Still, the fact that we're relatively close to the lows of the day over here and lows of the week suggests that there may be more downside action, and a break of the 34.50s, all the way a break of the 34s, really 34.50s as the support here, would really open up the full run towards the 32s. So I'll be watching this very carefully, and if we have a second day of strong selling with a break of this low over here, I would be much more comfortable taking a short on dollar CAD as the week progresses. So that's how the week shapes up. I wish you guys the best of luck, the best of trading. Boris over and out.